What are you seeing in the market at the moment with guys that are in terms of activity? And I caught one of your presentations the other day, and you sort of touched on the fact that a lot of people have got this misconception that values are going down and what have you. What's actually happening on the ground out there?
Yeah, sure. The market did come back last year, and that was in the backdrop of AMP moving their bowler from 4 times to 2.5. Most of the market was trading about 3, but because of that, it came back to about 2.5 times on recurring revenue. The perception is that with all of the advisors that have exited in 2019, but around about 5,000, and this year to date it's around about, I think, 1,700 to June 30. And so the perception is that everyone would have sold as they went through, and therefore dragged markets down even further. But if you have a look at those numbers of exits, the vast majority really in 3 different camps. The first being bank salaried advisors. So their departure, there was no asset sale. The second part has been accountants that no longer are able to operate under the exemptions. And there are also no sales that have come from that either. And the other one is that mainly the institutions, but some other dealer groups have deemed that businesses less than 400,000 were not profitable from a dealer perspective, and therefore some have been unable to find homes. And so there has been sales, or that they've given the business, or they just walked away from the business. A lot of those were actually sub 100,000 who were really using the revenue stream, which is predominantly grandfathered revenue, as almost like an annuity stream. So what the market hasn't seen is this flood of businesses coming to market. I think it's a bit like the property market. If you think that you're selling into a depressed market and you don't have to sell, you don't. And so I've been selling and valuing businesses for 17 years. This is the greatest imbalance I've seen on demand, which is excessive, and supply, which is at its lowest level.
Right. Well, that's interesting. So there's people out there that still want businesses.
Oh, more than ever. And that's for a number of reasons as well. The first is the cost of business is going up. We're seeing PI increase on average somewhere around 20 to 30%. We're seeing dealer fees increase on average 25%. That's this year, and they'll go up even further. You've got the additional compliance overlay. You've got ASIC fees. You've got education costs that are coming in. And so the only way that you can continue to maintain profitability is, if you're not able to do it by organic growth, it's inorganic. And at the same time, we've got interest rates at its lowest levels ever. So we've got cheap finance out there, somewhere around about 5% interest rate on a cash flow brokered transaction, obviously interest deductible. We've got significant amount of capital that's in the marketplace as well. And so this need for size and synergy benefits has never been greater. And so that's what's fueling the demand.
Yeah, so people trying to get scale.